Hello, my name is Jason Mercer. I'm the Toronto Real Estate Board's Senior Manager of Market Analysis. I'd like to take a few minutes of your time to go through our most recent economic and commercial real estate update covering transactions through June 2011. And we saw transactions in June, commercial lease transactions, down by almost half compared to the same month last year. Part of this has to do with the volatility that's sort of built into the commercial real estate market. So for example, in May, we saw transactions up well above what we saw in 2010. So there's this give and take that goes on from month to month in the commercial market. Some of that has to do with the complexity and size of the deals that we see in commercial real estate versus what we see often in the residential market. But it's also important to think about some of the underlying economic fundamentals and how we expect some of these indicators to change over the next year or so, and how that'll affect the commercial real estate market, both in the second half of 2011 and moving through 2012. And in doing so, probably the first important thing to look at is where we expect overall growth in Canada to go. And after two strong quarters, both the fourth quarter of 2010 and first quarter of 2011, the consensus is that economic growth will moderate. We'll see growth now in the sort of the 2 to 2.5% range as we move through the remainder of 2011. And certainly the latest monthly report from Statistics Canada on GDP suggests that this is the case. We saw GDP almost flat between March and April of this year. So when we think about where growth is coming from, we're still expecting to see quite a bit of that growth driven by the consumer side of the market. And obviously that feeds through into a lot of demand for retail products, for example, which benefits that sector of the commercial real estate market. But we think about the weighting of transactions through the Toronto Real Estate Board. A lot of our transactions are weighted towards the industrial segment of the market. So we want to think more about business investment and trade. Certainly on the business investment side, with interest rates remaining low, there's still a lot of impetus on the part of businesses to invest in new capital equipment and real estate. On the export side, things are a little bit more cloudy. Certainly we are expecting to see more trade with the United States and other countries, but there are some issues that present some risks moving forward. Obviously the high value of the Canadian dollar vis-a-vis the US impacts the demand for goods and services produced in Canada. And even more importantly, the slower than expected recovery in the U.S. economy south of the border. So slower consumer spending, some of that driven by the lack of recovery in the U.S. housing market, is also impacting the demand for goods and services produced in Canada and other parts around the world. So as we think about where we expect the demand for commercial real estate to go in the GTA in the second half of this year and moving into 2012, it'll be important to balance off that consumer-driven side of the economy that is going quite strongly, or growing quite strongly still, versus what we're expecting to see outside of Canada, and particularly in the United States. And we'll follow up on these indicators further as we move through the year, beginning with our July economic and commercial update. Thank you very much for your time. I look forward to speaking with you soon.
Brought to you by GTA Realtors.